This is probably the most important video I've made to date, and it is on risk management and position sizing. So for this video, we are going to be using Opendoor, which is a stock that we recently traded. It's been an amazing trade, and some people are still in this. As you can see here, the entry price was 258 and the stop loss was 246, which constitutes a spread of 12 cents from entry to stop loss, which you'll see in a second why that is a very important thing. But anyway, let's go down to the hourly to break down why I bought and when I bought. Right, so it was breaking out here. As you can see, this red line is the entry price. And the stop loss, which is what we're really here to talk about, was 246. Right, so the reason why I chose 246 is because I felt if the stock price went down to this level after breaking out here, it would invalidate the trade. We are buying a stock for the continuation of momentum or for the momentum to expand. And if it fizzles out to this level, that momentum is just not there. So it invalidates the trade for us. Now, we could raise the stop loss slightly higher, lower, but you want to choose a sweet spot that basically just invalidates your trade. Now, the closer you can get your stop loss to your entry, the better, and you'll see in a second why. And this is basically the most important part of the strategy because this is the part that can really make you rich. So this is the risk calculator, which is available to all members of the Discord, which is in the link in bio. By the way, guys, in the Discord, I alert all my trades, my stop losses, etc. And there's a lot more in there. So anyway, we're using a $10,000 account as our default account size with an entry price, which follows the Opendoor trade, 258 for the entry, 246 for the stop loss, and you're risking 1%. So the amount you risk per trade is dependent on the account size, right? So typically 1% of your account is the standard size I like to go with, which in this case on a $10,000 account would be $100. If you have a $50,000 account, that would be $500. But the point is you want to keep the amount you lose consistent and small so that you can still have big winners, but when you're losing, you do not drown your account. So anyway, in this case, right, this is what the calculator does. It tells you how many shares you buy based on your risk amount and based on whatever, all the variables here. So in this case, we're buying 833 shares of Open. Now Open right now is at $9, right? So we'll just look at it like that. 830, or we go 9 minus 258, which is our entry, which is $642 per share. And we can multiply that by $833, just like that. $5,300 in profits from this one trade. That pays for 53 losses, right? So our win rate, since I started the premium, right? We log in all the trades, it's 38%. So typically in most markets, the strategy is going to be below a 50% win rate. But when you have the potential to have trades that are 53x the amount you risk, you're going to be very profitable. So anyway, this is where it gets interesting. Let's say I wanted to raise my stop loss and have it tighter. Let's say I felt like, okay, you know what? If Open goes down to 154, if it's just not, doing incredible from the point I buy, I don't want to trade this, right? So let's just say my stop loss was 54 instead. So 254, that's 2,500 shares. So by the way, this stock never looked back. So you could have done this and not have been stopped out. Now the odds of being stopped out are higher because the stop loss is just a lot closer. But look, this is our stop loss line. We raised it from this to this, and we go from 800 shares to 2,500 shares. So now let's see what that does to the calculation. So we take 642 per share, which is how much we profited per share, at least if you're in right now. So 642 times 2499. That is a $16,000 profit. So it's 160% return on one trade on a $10,000 account. So that right there is the power of position sizing. And do you know what it cost you? It cost you $100 of risk. If you stop down in this trade, you're losing $100, right? So basically you turn a risk of $100 into $16,000. And just going back to the original entry point of 246. See, no matter where the stop loss is, you're still risking $100. Let's say we made it 225. Let's say we went low of day. Now we're only buying 300 shares. So if we said, okay, let's stop open out on the low of day, which was here, which by the way, we didn't need to do that because, or low of day was about 226, right? So if we put the stop loss at low of day, first of all, we wouldn't need to do that because if it got here, the trade is, in my opinion, over anyway. But if we did that, we would only be able to buy 300 shares, which, so 642 profit per share times 300, that's still a good trade, but it's nowhere near 16,000, is it? So it shows you the power of where that stop loss is, right? So, and let's say you didn't want to risk a full 1%, but you really wanted that really tight stop loss. Yeah, that's fine. You could still go with the 254 stop loss and you're still buying 1,200 shares, but now you're only losing $50. So this calculator is really important and picking the right stop loss level is essential. So I just wanted to make this video really quick so you guys can kind of understand the overall concept in a short period of time. If you want more elaboration or if you have any questions, comment below. If you want further explanation, you can always ask me in the Discord. Everything, links are below. Thank you guys for watching.